Hello and welcome to this special webinar from Fat Profits. I am Roger Malik. I am the Head of Client Services in our Sydney head office. And joining us in today's webinar is our Senior Account Manager, Chris Balafas. Chris, welcome to the webinar. How are you today?
Yeah, good. Thanks, Roger. Thanks for the welcome and welcome to all of our attendees. Looking forward to going through quite a few stocks and sectors. So we do hope you find this webinar beneficial.
Absolutely. There's plenty to talk about. And as you know, our headline for today's webinar is Commodities Super Cycle. So we are going to talk a lot about commodities today, and we're going to give away a few recommendations. In fact, just in a moment, we will discuss this. But before we get into today's webinar, all our presentations from Fat Profits are general information only. We don't take your personal situation into account. So if you are looking for personal advice, please see your financial planner or advisor. And also past performance is not a reliable indicator of future performance. Now, during this webinar, we encourage you to ask questions. There is a Q&A at the end. So if you have any questions on stocks or the markets or anything that we are covering today, feel free to type them in and we will answer them towards the end of today's session. And finally, before we get started, let's talk about what our main points of discussions are today. So firstly, we'll look at the ASX 200 as to where we think our markets are currently at and where we think we are heading. We are going to give away today 4 stocks to buy. So hopefully you can make some notes and take some good ideas from us, and they are available to be discussed as well. Then we are going to discuss commodity super cycle and what that means, where we're at and how long this has got to go, and what are the key things to look for if you are an investor in mining companies. We are going to discuss gold, lithium, nickel, as well as copper. And we will also be showing a tour of our members' website, a sneak peek inside our members' portfolios and what sort of information we provide as Fat Profits. We'll discuss a bit more about who we are, what we do. There is also a special offer for people who are interested in joining our service today. We will also be sharing a sneak peek of our dividend portfolio, which is very important for semi-retired and retired investors. That's been producing some heavy returns of 18% plus on an annual basis. And finally, we've got 3 stocks also we'll be providing that you should avoid. And finally, towards the end, we have a high conviction buy for those of you who are looking for the next best thing. So with that said, let's get into our discussion today. So firstly, let's have a look at the markets. Now, Chris, I forgot to say that earlier, you've been involved not only in the markets for a long time, but also with Fat Profits. You've been with us for, 11 years plus now. You've seen a lot of ups and downs in the markets, but looking at the S&P 500, probably over the last 2 years, this is a 2, maybe 3-year chart. It's pretty clear that we've come out of the pandemic at a strong level. It's gone up to its highest level ever. But in the last 3 months, we've seen volatility, we've seen inflation, we've seen lots of things come through. What's Fat Profits' current view on the US markets? Let's start with the US first.
Yeah, true. I mean, they are the biggest economy in the world. And you're right. I mean, a global pandemic, the markets are going to be hit. But this is just a great example of what's been happening in the markets. And if you just look at that dip there in the last 3 months, I mean, you don't need us to tell you we've had a lot of volatility. Just inflation alone, which we're actually going to talk about a little bit later, inflation's back up to 8% in America. We still have this geopolitical tension in Europe, and while it's not the first war that we've experienced, Roger, it's certainly bringing volatility. But our forecast is very positive for the US markets in the second half of the year. And again, we're going to talk about this a little bit later. If you've got the quality stocks, if you just be patient, ride the volatility, you definitely benefit from the markets.
Absolutely. And look, to add to that as well, I will say, look, at Fat Profits, our views are that while the volatility will probably continue for a little while longer, and we can't rule that out, but overall, we are positive on the markets, and we expect this black line that you're seeing, that's the resistance line at the moment. We expect that to be broken probably more in the second half of this year. and new record levels to be retested towards the end of this year. So overall, we are bullish this year, but volatility is still to be remaining reasonably high. Now let's look at the ASX sector. Before we look at the ASX markets, it's important to know how we are positioned. So if you haven't looked at this before, this might be some good information for you, because financial stocks are heavy in our ASX 200. So as you can see, 31% of the index is formed by financial companies, i.e. banks and insurance companies. And then 17% are materials, which is our mining companies. So it nearly makes up half of our market. And the rest are obviously all the other sectors combined. So with that said, if you look at the ASX 200, we know that we haven't seen as much of a shakedown in the last probably the first quarter of this year versus the US market. So Chris, is our mining companies, is our financials, are they playing an important role in keeping the ASX reasonably up versus the rest of the world?
Yeah, you make a really good point. And while the ASX is only very small compared to the US markets, we still look at the US markets when even recommending Australian stocks, Roger. But you know, the great thing about the ASX, it's one of, if not the highest yielding stock exchange in the world. So we really do benefit, especially with the materials in the current market. So look, a little bit of volatility, as you can see there, with a bit of a dip, but we have no question, especially moving into the second half of 2022. We have a very positive view on the ASX, so it's really good to see this chart.
Absolutely. Well said. All right, let's move forward. One of the key things which we've learned at Fat Profits, and I certainly have gained a personal experience with this, is that money never sleeps. And this is the old saying in the Wall Street as well as around the world. And this line, if you like, or the proverb, it says, if you don't find a way to make money while you sleep, you will work until you die. And look, that's as true as today as it was always. And one thing which if you walk away, for those of you watching this webinar today, if you walk away from this webinar, at least, focusing a little bit more on how you can make your money work a little bit harder for you versus you working harder for the money, you'll be way better for it. And at Fat Profits, that's what we teach, that's what we preach, and we live and die by that. And we will give you a few examples today on how you can make your money work a little bit harder for you. So if you are getting that 5 to 10% a year, for example, imagine if you can push that to that 12% or 15% a year, just working a little bit smarter. And that's what makes the world go around. So we'll talk more about that in a moment. Now, the key thing which you have to keep an eye on is, where is the smart money going? And the smart money at the moment is going away from technology companies, which are getting smashed in high interest rate environment, which is always the case. It's also moving a little bit away from property, not a lot, but slowly and steadily moving away a little bit from property, but big time moving into commodities and big time moving into finance. So those two sectors are in play, and we will provide our reasons why you should consider them if you haven't already. And if you have, and you're still looking to add more, well, this is a great time to do so. So let's talk about commodities today. So first thing first, let's have a look at commodity super cycle. For some of you listening to this term, you may have never heard of the term, or you may not understand this. So we'll shed some light on this today. So this chart here shows you over the last 100 years of the stock market. It shows you the super cycle. So the dotted line where you see the mouse moving, that's the market average. And anytime, so you see the orange line, that's the oil price. You see the other things like agricultural and base metals. Every time this has gone above the market index, we've seen that once, twice, 3 and 4 times. So we've seen 4 super cycles in the last 100 years. So what does that mean? That term simply means that the price of commodities has risen from the average long-term trend. And the further it rises from the trend, then the bigger the deviation in commodities and your mining stocks. And we believe at Fat Profits that we are now entering, in fact, we have well and truly entered the fifth super cycle. The biggest super cycle we've ever seen was in 70s and 80s, and you can clearly see the huge deviation. And for those of you who've been around long enough, you would remember the huge upside we saw in the 70s and 80s, and the inflation that also really was running rampant. So we are seeing inflation at the moment. We're seeing commodity prices rise, and here's a few examples for you. So if you look at some hard commodities, you see gold, silver, copper, iron ore, lithium. Look at this column where you see the mouse, year-on-year returns. First up is gold. Yes, gold is moving. We'll talk more about it shortly. Copper is higher, but the big one is lithium. That is a clear standout. And why? We'll touch on that shortly. Just keep that number in mind. It's risen 485% year on year, right? Next up is other hard commodities. And if you look at coal, you can see lots of green there. You look at aluminium, you look at nickel. That's another one we'll talk about today, palladium, and plenty of others. So there is a clear sign that these prices are rising. So Chris, one of the first ones let's talk about is gold. Let's talk about gold first. And inflation and gold, they have a relationship, whether people like it or not. And let's talk about inflation first. You mentioned that earlier, that US inflation has now reached a 40-year high of 8.5%. So how does this impact gold, for example, and what's our view here?
Yeah, Roger, that it's not an attractive chart there, is it? Unfortunately, inflation just continues to go up in America. So, how do we benefit from that? Well, as you mentioned, gold in our next slide there. What an awesome hedge to the American inflation. They're up at 8% at the moment. In fact, I believe the American debt just rolled over to $27 trillion. So, we at Fat Profits have been following gold since it was 260 an ounce, and we've always loved gold. We're not saying to put your firstborn in it, but you certainly, like the old saying says, you have to be in it to win it. And as you can see in this chart, it's around 1950 US dollars. Not just Fat Profits, but Goldman Sachs, JP Morgan, they can all see second half of this year, especially with interest rates on the rise, Roger, in America, inflation. We're going to be looking at back to all-time highs around the 2100 an ounce mark. So yeah, what a hedge against what's happening in America at the moment.
Excellent point there. Hedge against inflation, and a lot of people often underestimate what you can do in these sort of times. So gold, we are predicting to go above $2,000 again, which is its previous all-time high. So now the question is, if that is a consensus, are you holding anything in gold? And if not, well, here's one stock we can give you today. So Chris, Evolution Mining, we're not strangers to this stock, and I believe
No.
sort of around that time when you first joined Fat Profits, when we first bought this, right?
Yeah, that's right. So I started in the London office. I was there for 5 years, so I know the FTSE and some of the miners over there very well. But yeah, what a great stock. This has really evolved into an incredible stock, Roger. We first bought around the 20-cent mark, and it just has continued going up. In fact, it did touch $6 pretty recently. Not only are they paying an income, Roger, but one reason why our geologists and resource analyst David and the team like this stock is that they're a very cheap gold excavator, Roger. In fact, I think they dig out gold around $1,130 per ounce. And just looking back at that chart, at the moment, we're at 1950. Now, if that goes back to the highs of 2100 an ounce, Evolution not only are debt-free, Roger, but their profit margins continue to increase when the gold price continues to increase. They're completely debt-free, so they're obviously just going to keep investing in the company. So yeah, what a great stock to be looking at.
Absolutely, well said. And look, yeah, in the short term, they've had a few issues which has pulled the share price down. In case you're wondering, they've had a few labor issues and so on, which are getting sorted. And so there is a great opportunity here for they're one of the top 5 gold producers in the country. So that's one stock for you to check out. But outside of that, we also have plenty of other stocks as well. We'll talk more about in a moment. Let's move on to our next commodity, lithium. Now, lithium, as we looked at earlier, is up 480% year on year. Why, you may ask? And look, I don't know about you, Chris, but are you planning on buying a Tesla anytime soon, or any of these
Certainly am.
electric cars?
That's one of the goals. Everyone is into electric cars, electric batteries, electric watches. So yeah, you can't deny that it's definitely here to stay, Roger.
Well, whether we like it or not, we will all be driving electric cars in the next few years, and that's where we're all heading. So the simple science where we're headed is we're going to move away from the traditional petrol cars. We are moving into lithium batteries, nickel. So lithium and nickel are both used for electric car batteries and plenty of other things. So at the moment, if you look at the price chart, it's pretty evident, and you can see this over the last sort of 6 years. The price was sort of flat for some time, but in the last year or so, it's been a huge rise. The reason is very simple: the supply and demand. Supply is very limited, but demand is just surging. So when that happens, of course, we know where the price goes. The price is shooting up. Now, how can you benefit from this? So you're only in one or two camps at the moment, the ones who are watching the webinar today. Either you've already got in, you bought some stocks and you're happy, or you missed out completely. Now, if you are happy and you want to add to it because you think it's going to go higher, we can give you one stock today that you can look at. If you completely missed out and you're searching for one or two ideas, well, here's one for you today. A company called Allchem. And Chris, maybe I won't steal your thunder. You know this company inside out. So tell us a bit more about why Allchem has actually gone up from $2 to now
Yeah.
$13.
Yeah, what a stock, Roger. I mean, if you just put, as you can see there, $10,000 in our initial buy, which when we listen to our members, usually they are putting around $10,000. You can just see the profit you would have made. Now, these guys are just incredible. That was in 2020. Now, they're, as Roger mentioned, a lithium producer. In fact, their portfolio is global. They're a $6 billion market cap. But why we like these guys, Roger, that they're a high quality lithium producer. Do we still like them? Well, as you can see on the top right, we still like them. We're pleased with their results. Alkanes still have a very competitive price, and just looking at the lithium environment, it's still very strong. And we still actually expect that the Alkane will still have a strong, attractive growth potential in the future. So we still like them despite what they've done so far.
Absolutely. And look, we're still maintaining a buy here. Now, the question is, some of you might think, well, it's already had a big run. Well, you're right. It has had a big run. So probably the early bird advantage is gone here. But, you know, of course, that's the value of doing your research, or maybe subscribing to companies like us, where we can give you that early bird advantage, where you can buy in early. Obviously, in hindsight, we'll all love to go back and buy this at $2 or $3 or $4. But look, we do think at $13, there is still some gains to be had. Might not be as big, but still some money to be made. So if you happen to buy this from our research and make some money, well, you can thank us later, but that's one buy recommendation for you. Next commodity is nickel. Look, no stranger to the same sort of thematic. Lithium and nickel are both used primarily for these car batteries and all sorts of other batteries. And while the price has been rising over the last year, in fact, there was a point just only recently where it actually touched $100,000 a ton, but that was due to some shorting and some anomalies going on. But nonetheless, the price has calmed down a little bit, but it's still very high compared to a year or two ago. Now, the thematics are the same. The demand is huge and supply is limited. So there's only a few companies. Now, we will give you one more stock here, an Australian miner, and you may not have heard of this name, or you may have, Mincor Resources. They are an excellent nickel company out of Western Australia. So here you're seeing a picture of their managing director, David. This stock is a market cap of just over $1 billion now, but it wasn't the case a couple of years ago. They do have a lot of cash that is sitting on as well. So they're all cashed up over 100 mil, and they've got a good credit facility. So the location is the key. They've got fantastic locations in Western Australia, and of course they're in the Kambalda location there. Now, a couple of things. One of them is this region has produced huge amounts of nickel and good quality high-grade nickel. They've got their Cassini mine and the Golden Mile mine. Both of them have already been fully funded. They've produced high-grade deposits which have all been assayed, and the market knows all the information. It's all been released. But the other benefit with this particular company is they're about to become a producer in June. So it's only a couple of months away from producing the first nickel. And from then on, they're going to ramp up production from one quarter to the next. And the other benefit is they've got a contract with BHP, which expires, as you can read here, in December 25. So they've got a long-term contract to use the BHP's infrastructure to transport the nickel from that location. So that is excellent news there as well. Now, because they're about to become a producer, you can see on the charts here, and Chris, we got in early bird, as we said earlier, only a year and a half ago. So please tell us more.
Yeah, as you can see on this screen, another great example of just getting in before the general public, Roger. The reason why we like them, there's a few reasons, and we still like them if you don't hold them. Not a small company, $1.2 billion market cap, nickel developer. Again, we're looking for high quality companies, Roger, establishing high quality grade of nickel. One reason why they're so attractive to us, $110 million in cash. So absolutely no concern of the company's liquidity. And, you know, just look at that chart. Those green bubbles that you see there, that's every time Fat Profits re-recommended to our members. So let's just say you did buy them in October, very recently, last year at $1.23. You know, we're up to nearly at $2.60 at the moment, not a long time to hold it. Now, we're still reiterating this stock as a buy to our members, Roger, and I hope the ones listening in today can see the benefits to this. Now, as we can see, and you mentioned earlier, they are nearing record highs. Now, we're not silly. We've got to be very cautious, but there is much growth potential with Mincor.
Yeah, absolutely. So timing is important. So while we're saying buy recommendation, you need to be a little bit cautious in terms of your entry. Look, we can help you with that, but obviously for all members who join Fat Profits, that's what we do. We tell you when to buy, but we also tell you when to sell. So look, it has doubled, Chris, you're right. It has doubled in the last 6 months alone. So anybody who's bought it recently, in fact, I remember even in these free webinars that we do from time to time, we did provide this at $1.20.
That's right, we did.
As a buy, and a lot of people may have bought it. We would never find out unless they speak to us. But if they did buy it at $1.20, they'll be pretty happy at the moment. Okay, so these are a few buy recommendations for you. Now, if you're looking for the next stock, which could be the next Mincor, could be the next Allchem, or the next Evolution Mining, well, here's one stock. Now, unfortunately, obviously, we can't give the free name away because this is still in its early stages. So this is really for our members. But if you are interested in getting into a nickel company, which has tripled in the last year, but still at an early stage, and they're not producing yet, excellent potential. Well, this is a company you can talk to us about, and we can give you that stock if you decide to join our service. So Chris, what do we like about this company? This has gone triple.
Yeah, absolutely. If you feel you may have just missed out on Mincor, even though we still like it, what a stock, Roger. In fact, everyone listening here, it's one of my favorite stocks. Roger hears me all the time talk about this company. As you can see, we've held them very recently, around 9 cents and then 14 cents. Again, Roger, we're looking for quality, a high quality nickel company. Again, they're not small, they're touching nearly $1 billion in market cap. And just think about it, Roger, nickel, what are they used for? Medical equipment, smartphones, power generations, construction materials, batteries. So nickel's not going anywhere. So as you can see, they have been going up. We've definitely got in at the early point. Why we like this company, Roger, their all-in cost is estimated about $6 per pound of nickel to excavate. Now, current nickel prices are roughly about $20 per pound. So again, this company's profit margin, a bit like Evolution, is just amazing. They continue to have drilling success. They will be having a foreseeable future of positive news. And again, in our view, this nickel explorer has just significant upside. Again, as you said, very early, and that's fine, but a lot of value. And look, at 33 to 37 cents, we're certainly, again, if you feel like you've missed out on Mincor, well, this would be one stock that we're telling our members to buy.
Well, look, we all love a little bit of green in our portfolio, and I can assure you, if you buy any of these good quality companies, you see that 10K turn into 30, 40K, and you can look at that screen when you log into your ComSec or your NAB trade, and you see a few of these. Well, look, it all makes us feel good. And that's what we want, more of winners versus losers. And look, we've got plenty of these where they come from. Next, commodities, copper. Look, we will just briefly touch on this. And of course, anybody who's looked at copper as well, you can clearly see in the charts, this is the last 3-year chart, and it's been steadily rising. It's pretty steady, and there's plenty of good companies on the ASX, and we've got a couple of them in our portfolio, and certainly another commodity that we believe will continue to be strong, and something for you to think about. Now, what do we do at Fat Profits? So look, something we are proud to share is we managed to pick 3 out of the top 5 ASX 200 companies last financial year. And it's not often that you get that, but look, when you do, you want to tell everyone about it. So we're happy to share this. Look, Chalice Mining, if anyone's heard of this, this was easily the best stock on the ASX last year. So that was our recommendation to members. Hub 24 was number 3 on the ASX last year. And number 5, Orocobra, which is now got a name change. So the one we talked about earlier, Allchem, AKE, that used to be called Orocobra. So that's the 5th on the ASX last year. So look, we got a pretty good outcome. It helped our overall returns. Certainly a lot of our members picked some of these stocks and they were very happy. So I guess a bit of comparison, not going to be trying to boast about it, but you know, if you managed to pick any one out of these top 10 stocks last year, you would have done well. So ask yourself the question, did you get anything out of that? If you did, great, well done to you. If you didn't, well, probably you missed out. But look, what's happened has happened. Now we've got to look forward. So if you're looking for a bit of assistance, maybe you are looking for that edge, we can help you. So Chalice Mining, it's currently a hold recommendation. We're not suggesting to buy today. But look, just a brief history here. They had multiple deposits and locations in Australia, including WA and Victoria. They're into nickel, copper, gold, and they had one of the key reasons why they were actually the outstanding performer last year is they had the biggest discovery, palladium, in Australian mining history in the last 30 years, and that really was outstanding. It took the share price from, sort of 12 cents to $10. And Chris, this is a testimonial from a young member. I believe he's in his early 30s.
Yeah, I think it's one of yours. We've got quite a few of these stories, but it's nice to change someone's life. The best stock on the ASX, and we're really proud about this company. Yeah, he's a young gentleman, an investor, $5,000 at 12 cents, bought a little bit more. So overall, Roger, he had about $18,000 of invested in Chalice Gold. Well, as you can see, he made over $500,000 in his portfolio just on Chalice Gold. I believe his father-in-law is with us as well. No doubt he'll be a member for quite some time, but it's just nice to see that members are really benefiting from our recommendations, and what a stock, what an absolute gem we had in Chalice Gold.
Yep, absolutely. Look, it's good to see, no doubt about that. And Look, clearly you can see on the charts what this stock has done. And look, it's changed a few people's lives. I know we have spoken to a few members. In fact, the one particular member that he's asked us not to mention his name. So he's a pharmacist in Tasmania, but he put in a reasonable amount in Chalice. And actually, I can tell you that his current portfolio is $12 million.
Yeah,
And
excellent.
Chalice mining is a big part of that. So yeah, look, a lot of people's lives have been changed. It's real money. But look, you can see that we've gone up from 12 cents early days to, you know, as high as $10. It's currently between $7 and $8. Big success story. But we're not suggesting to buy this, but it'd be nice to get one of those. Look, the third best stock on the ASX was Hub24. This is not a mining company. This is a financial technology firm. They have funds under management, and this has been a phenomenal company. So, you know, when we first bought them, they were a small cap, early days, but they've grown and grown. Now they have about 5% of the market share in Australia. So a reasonable sized company, the funds under management, earnings, everything's on the rise. They pay a dividend, fully franked now. And if you look at the share price, look, early days, and this is what we always want, is buy a company early days. And we can't stress that enough. You do your research well, have patience, hold it, hold it, and hold it, and it will pay you off. And this stock has paid, again, very handsomely. 10K has turned into 175,000. Again, we're mentioning a hold at the moment. We're not suggesting a buy. Now, that brings us to another topic. Before we look at some other stocks, let's take a pause and let's think about one of the key virtues as an investor. And we can't stress this enough, is patience is the key to successful investing. Why is that? And why do we run out of patience sometimes? So if you look at Warren Buffett, the best investor arguably in the world, and I'll read out a couple of his quotes. And one of them, he says, the stock market is a device for transferring money from the impatient to the patient. He also says successful investing takes time, discipline, and patience. No matter how great the talent or effort, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant. Well, that's a bit of tongue in cheek, but we all get the message. So I suppose, Chris, what we're saying to the audience today is the patience can be tested. Of course, it always get tested, but those who lose it often regret it. And those who withstand that volatility, and we've got an example of that. So
Yes.
if you look at Fortescue, maybe you can shed some light on this particular example.
Yeah, good example. I mean, we don't get everything right all the time. The initial buy was good because they were paying a very strong dividend there. But again, the beauty about why our members benefit from us is during that pullback when it dipped around $14, Roger, we'll get in a lot of people call in. Well, what do I do around the 16 mark? Do I sell it? Do I get rid of it? Well, we're investing, Roger, in quality, right? And that's exactly our Warren Buffett approach, value-based investing. We were advising as a company, we were not selling the company. In fact, we were buying more. Now, hindsight around November, what a great price to be rebuying in at $14, because now we see it topped over back to around $22, currently about 21. And that was a really good suggestion. Hopefully the ones that called in asking questions, well, they took advantage of that. They didn't sell because now they're back up to over 21.
Okay, so we've just received a question from Margaret. She's saying, so with Fat Profits, do you have a facility where you can call and speak to people over the phone? Because currently she's with an online service platform where it's
Right.
just everything's online.
Yeah, good question. And again, we'll get to that point a little bit later with our memberships, but absolutely, Margaret. If you have a question about a stock, you don't know what to do with it, there's no such thing as a dumb question. The markets, they're very big, they're very volatile. You can call in, you'll have an account manager. We have the analysts here. There's always someone to get the answer. And what we do, we will give you our thoughts, our research, and hopefully what you do is you take away that information, Margaret, and hopefully you make an educated decision with your portfolio.
Right. Okay. Thank you, Chris. So look, this is just one example. We're not saying we get everything right, but what we're trying to say is patience is important. So for those people who may have sold thinking this is going to go down further, probably regretting it, the ones who picked it off them, they're the ones probably smiling at the moment. So patience is important. That's what we're trying to highlight. Now, moving on to another part of the commodity cycle, or super cycle, I should say, is soft commodities. And this is often overlooked by investors and not sure people are often not sure where to go. So if you look at soft commodities, agricultural, you look at soybeans, you look at wheat, you look at cheese, milk, and so on, and you look at the column year on year where the mouse is pointing now, you see all you see is green. And that is another thing people need to take into account, is largely thanks to food inflation. And look, part of that has got to do with Russia and Ukraine war, that we know that for sure, because Ukraine is a big supplier of a lot of the food and agricultural commodities, but also inflation, overall inflation, and labor supply chain issues, oil prices. There's a whole mix of it, right? So when food prices going up, the likes of wheat's going up, we can feel that when we go to groceries. Well, what can you invest in? We have a number of stocks in our portfolio, and one of them we can give you today as a free stock recommendation is Elders. Now, you may or may not have looked at this stock, but what an amazing company. They've been around forever, and most people have heard of the name. But if you look at the financial summary, this is the last summary that they reported. You can see that financial year 17, 18, and 19, the numbers were okay, but they really started taking off in 2020 and 2021. And recently, the balance sheet is looking as good that the CEO provided a trading update only a couple of months ago. And this is what he said, is the company expects to report financial year 2022 underlying EBIT, which is earnings before interest and tax, in the range of 20 to 30% above financial year 2021 underlying EBIT. This outlook exceeds forecast market expectations as calculated from the midpoint of the earnings expectations. So in other words, they're now expecting higher earnings. So this is a great sign of what we've been saying to members. We've been predicting this. And if you look at the share price, you can clearly see that, yeah, we've held this stock for years and years. As you can see it from 2014 at $2.30, and we've seen a huge rise. But off late, this is when the company announced, when they were trading at around $11, they had that update, and the share price has taken off. We suggested to members even buy at 12, 12.50, and now it's 14.40. So a lot of people would have benefited from it even in the short term, but longer term members would really be feeling and enjoying the real gains. So this is one example. It is still a buy. We do think you can still make some money even at today's levels, but the real thing is we have a number of other stocks as well outside of Elders, which you can look at in soft commodities, and we certainly urge you to look at them. Now, a couple of things here. How do you make big money? And look, everybody wants to make as much as you can. And one secret which Warren Buffett has always shared is buy when others are fearful and sell when others are greedy. Now, it's called a contrarian approach, going against the crowd. And this has been working well for him because he's produced 25% returns per year for 40 years plus. So we can't argue against him. Now, one thing which often people ask him and his associate, Charlie, is how do you make the big gains? Is it by buying and selling stocks? But they always say, no, it's not. It's always by holding stocks for a long time. They're not traders. And anybody who tries to time the market often regrets it, because often it comes back and bite us. And we've all tried that. Look, let's be honest. We've all tried to trade, right? We all try to time the stock, look at the charts, predict where it's going to go, and try and sell it. But it doesn't work. Let's just be straight up about it. All you end up doing is paying a lot of capital gains tax and a lot of pain and headache. So the reality is we've got to do what already works. It's been proven over years and years. You buy quality companies, you hold them for long periods, it works. So Chris, can you tell us a little bit more about Fat Profits and our philosophy and who we are, what we do?
Yeah, and there might be some listeners today who don't know too much about who we are, and hopefully you're getting a bit of an idea now. But Angus Geddes is our CEO, and he's been looking after us for the whole 22 years. But as you can see, back in 1986, when he was only a young lad, 35 years ago, he turned $200 into 35,000. And since then, Roger, he's been in the markets, he's been a broker, he's really done everything in the financial industry. But then he went and started Fat Profits back in the year 2000, and now he's managing nearly close to $100 million in managed funds. So we started the Sydney office. As mentioned earlier, I did spend 5 years in the London office to help that office out. So we've got an office there. The Wealth Management Division was born in 2007, and we've also got the New Zealand office as well. Now, 22 years later, we're covering all the markets. As you can see there, the Australian markets, Asia, which is always interesting, the US being the biggest markets, the UK with the Brexit, and Europe. And I love that point, emerging markets. We're always looking for other opportunities that we can get our hands on. And also with the team, there's many analysts, and as you can see here, you may have seen David Lennox. He's our resource analyst and geologist. He's always on Bloomberg, CNBC, Ausbiz. You could say the face of Fat Profits. He knows what he's talking about, and he looks after our mining report. As you've seen in some of the stocks today, very successful. And again, he's been spent more time than 30 years in the markets.
Excellent. And of course, look, we're not stockbrokers. So I just want to point that out. Our service is not, we're not after your money. We don't need to manage it. You will manage your own money. We simply provide you the research, and you take what you can out of it, and you buy and sell based on our advice. Now, on one side, we have the research team, but the other side, we have wealth management, which means we manage real money. As Chris said earlier, Angus and his team of fund managers, they look after, you know, the money that members have actually invested into different accounts. So what you're seeing here is real money. The orange line is our funds returns, and the black line is the ASX 200 returns. So we put our money where our mouth is. The orange line has produced total return of 338% since inception in 2007, versus the ASX 200, which has only produced 122% return in that same time. So you can say we've nearly tripled the market. It's not easy to achieve over such a long period. And the best part is that this orange line, which is our fund, is moving further away from the black line. And this is a bullish sign of where we're placed, where our team is heading, and where the money is moving into. So we're not asking you to invest in this. So just let's be clear about this. We're just showing you that we manage real money, and we know how to do that. Now, the next segment is to also tell you today what stocks to avoid. So while we look at what to buy, we also suggest a few stocks to avoid. The first one here is AGL, probably one of the worst performers on the market for the last few years, just consistently underperforming the market expectations. They've had a series of issues. We've been avoiding that stock. We've never bought it, in fact, but in the last couple of years, we've had several requests from our paid members saying, I hold AGL, it's come down a lot, it's down to $12, $10, is it a buy, should we buy more? And we have said no. They've had multiple issues to deal with. In fact, lately, there is some sort of respite, if you like, because they received a new offer from a consortium to be bought out, which they have rejected, in fairness. So that's pulled the share price a little bit up. They've got a lot of work ahead. So at this point in time, we're avoiding that stock. And if you're holding it, we feel your pain. But look, that's a stock we would certainly be avoiding for the time being. Next stock is ZipPay. We all know what happened to buy now, pay later stocks. There was huge speculation for a year or two, and that took the likes of ZipPay and Afterpay from $1 to $14. And I feel sorry for anyone who's bought it at $14 thinking it'll go to $28 and they'll double the money. In fact, it's now down to $1.50, $1.20, $1.30. It's just floating next to nothing. Now, why is that? It was all speculation. They're still yet to make profits, and they're yet to make, turn over some dollars. And now that interest rates are rising, all these speculative stocks are getting hammered. And our expectation is that they will continue to be weak. As interest rates rise, inflation rise, people will avoid these stocks, and they will go into commodities. they will go into financials, which are actually earning some money. So our view right now is still avoid Zip Pay and these buy now, pay later stocks. Last one on this list is Magellan Financial Group, which have been in the news lately. But Chris, we know this company well because we've held this stock in the past. We've made some money off this.
Yeah, we've got it as an avoid, listeners, but don't get us wrong. We love Magellan. They've done very well for us. As you can see, we did buy them very early on at $1.74. Now, a good reason, no one's got a crystal ball, listeners. We like them. We made a solid gain of 1,600%, and we sold at $25. Now, yes, hindsight, we could have sold at $60 if we didn't sell it. But as you can see, the avoid line, the candle chart, has just gone down and gone down and gone down. So if there's a profit, we will take it. We're not interested in Magellan at the moment. They've done very well for us. However, we do like the fintech sector. And as our members, or if you do join us, we do have quite a few fintech stocks to be looking at. And one of them at the moment that we've got is about 69 cents in the fintech sector in our portfolio. So yeah, we're just at the moment, we like the industry, but we don't like Magellan.
Okay, fair enough. So let's have a look at something else. Now, outside of growth, we're not just after growth as well, we look after dividends too. So it's a lot of our semi-retired or retired investors, and some of you might be looking at this presentation today and thinking, well, I also want to look at dividends. So just so you know, we have an income portfolio just dedicated for dividends and of course growth as well, not just only for dividends. Now, this is an example of its performance. Now, on the left, there are normally the stocks are listed here, but we've put a bit of a line through them because obviously we can't give away all the information. But we've got lots of financials and industrials and property stocks there. It has performed extremely well. And just to give you a bit of a summary, look, the bottom right here is all you need to know, is it's producing currently 18.1% annual returns since the last 10 years. So I just want to highlight that. It's not a one-year return. It's an average return per year for the last 10 years. And that is a huge return, especially considering that this is this includes top 200 ASX stocks is what I'm trying to say. So for example, if you look at the next composition table, and we're happy to share a few examples here, so you can see some names of some examples. But Chris, this includes a dividend component and forecast of around 6% dividend plus 12% in growth, correct?
Yeah, absolutely. And while we're talking about super cycle commodities, Roger, you know, a lot of our members, they're looking for income, and this portfolio is great. We've got financials, industrials, property, and again, we've taken most of them out. We're not looking in the review mirror, Roger. We're looking forward. So as you can see, the first financial year forecast, the second year, and as you can see at the bottom, a 6% yield, which is quite staggering. And a lot of our members, a lot of our retirees, they love that last column. So if they're looking for fully franked stocks, they don't have to go and search for it. They don't have to try and guess. We'll tell them which stocks are fully franked in our income portfolio.
Excellent.
And if we look at, go for it.
Yep. Yeah, so what I was going to say, this has 21 stocks, just so you know, it's not a 50 stock portfolio. It's 21 stocks, all well researched, and these are all in the top 200. So if you want to get that sort of return of 18%, you can simply copy this portfolio and just manage it yourself. And we update this on a quarterly basis. So it's not going to require week to week looking at it. Once a quarter, we will provide a full detailed update. You can look at it. If something needs to come out, we will let you know. If we need to add a new stock, we'll let you know. But it might be subtle changes. But 21 stocks, 18% return for the last 10 years. If that doesn't excite you, well, not many things will. Now, the last thing is we also tell you when to sell. So, Chris, this is a summary of our last 12 months of sell recommendations.
Yeah, we're happy to share this. These listeners are our sell recommendations, and no doubt you recognize a lot of them. And again, we're just using a $10,000 investment example. Just because it's at the top, or mentioned Boral, we recommended it at $4. We sold at $7.40, so you're up at $14,000. Domino's pizzas, I'm pretty sure a lot of us use them, and we're very happy with the restaurant. what an example. Under 2 years, Roger, we recommended them at $51. They're now 105, and we took a profit, and you've doubled your money. So, you know, we take losses. In fact, as you can see, in the last 12 months, we did take 2 losses. No one's got a crystal ball. As I said, no one gets 10 out of 10. But again, if you've been holding these stocks and you haven't made these returns, the beauty about our service, not only do we tell you when to buy, Roger, but we'll tell you when to sell, even if it is to sell half and take a profit.
Great, good summary there. And look, as you can see from the names, we're not just recommending your typical banks and Telstra and BHP, because most people can do that research themselves. There are some names here which you may have never heard of, and there are some that you may have. And that's the reason you want to look at another service, is to give you names which you probably might not look at otherwise. So how will we perform? Let's have a look at that now. Our annual return since inception, which is 2000 and when we first opened the company, so 22 years, our annual returns are just about 18% a year versus the market, which has done 8.5% per year. So that's an outperformance of 9.3% per year. So we're proud of this, and there's no denying this. It's not easy to achieve. It's a lot of hard work. And for those of you who know, if you've done that in any particular given year where you've done 18 or 20% returns, you know how happy that makes you. If you can do that from one year to the next consistently for 5 years, 10 years, 20 years, just think about what difference that will make in your life. Now, are we perfect? No, we're not. If you look at the breakdown per year, you can clearly see, look, 2020, we had a good year. We had 20%. The market did 3%, so we did a great year. 2019, look, we did not have the best year, although 19% return looks great. But reality is, and we are being very honest, the markets did 24%. So look, we could have done better. The markets got the better of us. Fine, we take it, not a problem. 2018, we think it was a great year for us. The markets were down, we got up, and that was good. 2017, we doubled the market. 2016, we doubled the market. And 2015, in my view, was clearly the standout. The markets were down 3.5%. We were up 18%. So this is absolute gold. So all in all, what we're trying to say is, look, we don't always get it right, but more often than not, we do get it right. So this is one reason you should consider joining our service. Now, all of us know compounding returns can really add to your bottom line over a long period of time. So this is an example. If you invested $10,000 20 years ago and added $5,000 per year to that portfolio, and if you simply followed our suggestions and you got that 18% return per year, that $10,000 initial investment and $5,000 addition per year over these 20 years would today look like $1.6 million. Now, of course, we all want that. So the question is, how do you get that? 1, you need patience. 2, you got to be in it. Absolutely. If you're out of it, you can't do it. 3, you got to have an open mind, because you will need to take suggestions. And if your mind is closed, well, unfortunately, it's just like a parachute. They don't work when they're closed. So you must have an open mind. You have to be willing to do something, and you must have patience and have a long-term view. So that's just to give you an example. Now, Chris, we've got plenty of other people telling the same thing. It's not just us explaining this, but we've got a lot of reviews, independent reviews from happy members.
Yeah, absolutely. In fact, I think we've got over 200 with an over 4% star rating. And these are all people just like our 33-year-old with Charles Mining who are making money. If you've got something good in this world, you know, you do tell people about it. So we're very proud about this, and we thank all of our members for these reviews.
Yeah, absolutely. Look, here's a couple of examples, and you can find them all on productreview.com.au. So do your own research. You know, read them if you really are interested in our service. Here's David. He's a retired fund manager and a retired stockbroker as well. So he knows a thing or two about stock market. He's written a pretty long review on us. Here's another one from Penny. She's been with us for 8 years. I have spoken to Penny a few times. She absolutely loves us. These are real people making real money, and we're making a difference to their life. So here's a few reasons. And Chris, I'll pass this on to you. A few reasons for people to join our service.
Yeah, listeners, a very important slide here. We're going to spend some time here. If you've been flirting with the idea of fat profits, maybe it's the first time you've joined us, You've known about us for some time. Hopefully this does convince you. You know, as Roger said, no one gets it right 100 times out of 100, but look at our performance over the last 21 years. We've averaged each year, if you were with us, you followed our buys, you followed our sells, your wins and losses, 18%. Guys, if you don't have the time or the inclination or even the knowledge on how to do the research, you can log in, you have a look at what we're buying. If you don't know when to sell, you have a log in and see when we're selling or selling half. The experience and a reputable management, you saw already some of our gentlemen that look after the company. The big one, and I'm very proud about this, 7 out of 10 over the last 21 years. So we're doing something right, Roger, and as you said, we're looking for value. We're value-based investors, and we're not afraid to take a profit, guys. As we saw with Magellan, if we take a profit, that's not a problem. We move on, and we're very proud about this, everyone. We're not a direct marketing company. You're not going to come on board with fat profits and need to buy another subscription or another subscription just to get what you want. You pay a one-off fee, which we'll go to very soon because I know we've got some specials Roger's going to talk about. There's no upselling. You pay for the service. Everything is beneficial to you. In the next 12 months, Roger, if our members make 18%, there's no hidden costs, there's no administration fees. They've already paid for the membership. And obviously, if it's up for renewal, then you will decide to obviously renew it. And as we saw earlier, we are literally managing real money. So you can give us that vote of confidence.
Great. Okay. Thank you, Chris. So let's show the viewers today what are the options available. So first, look, we've got 3 types of membership. Very simple. We don't have anything else. This is it. This is all you're seeing. If you choose one of them, that's all you're going to get. There's no upselling. There's no cross-selling. We don't have any other products. Okay. So first thing first, either one which you choose, they are fully tax deductible. They can be invoiced to your self-managed super funds or your own business name or your own name, whatever you like. That's not a problem. The difference in the 3. So first thing first, standard membership, premium membership, platinum membership. They have the first 3 points all in common with all 3 types. So first thing is you get a daily fat chat email from our CEO, Angus, every morning before the market opens, and it provides market commentary every day on what's taking place around the world. So you'll be well informed. All you need to do is take 10 minutes out of your day, read that email, and you have plenty of charts and information at your fingertips about all the activity in the market per day. Second benefit, you will get a weekly members only webinar. If you think this webinar is good information, well, but wait, there's more, because our members webinars every Thursday, live for an hour, are full of market information, full of stock information, and you can ask questions from our analysts directly. If you miss the live session on a Thursday, you can replay the recording, not a problem. You might be busy on a Thursday, we get it. We will email you the recording, you can replay that. Third benefit is you get a Friday fat wrap, and that's not a kebab wrap, so I just want to highlight that. It is our fat wrap from Fat Profits. So it's on a Friday evening, you get highlights of the week in the markets that you may have missed out on. So those first 3 benefits are common in all 3 membership types. The key difference is we provide 4 reports to members to subscribe, and you can choose all 4 of them, or 1 or 2 or 3, it's up to you. So the first report is Australasian equities. That covers Australia, Asia, and a little bit of New Zealand, but majority is Australia. So if you're after Australian stock market, research on Australian stocks, it's a weekly report. You get 5 stock tips per week, and we'll be buy, hold, and sell. Clear cut, save your time. We'll tell you which ones to buy, sell, and hold and avoid. So that's number 1. Number 2, you have a mining report. It's called Global Mining. It covers Australian miners and international miners, and it's dedicated to small caps, mid caps, and blue chips, all mining related. Number 3, global equities. This covers international markets, for example, US, Europe, and Asia. So if you are an international investor, that's a must. And fourth and final is a UK equities report, which covers, of course, the UK market. Now, the difference between the 3 membership types is with standard, you can pick 1 out of these 4 reports, not a problem. With premium, you can pick 2 out of the 4 reports, plus you also receive access to a premium account manager. So that means Someone like Chris, who is a senior account manager, been with us for 11 years, and he obviously knows a thing or two about the market. So if you've got a question, you want to talk to someone, as Margaret asked earlier, you can pick up the phone or shoot us an email, and they can give you some guidance, not a problem. And Platinum is the last one, where you have access to all 4 of our reports and the account manager. Now, before I get into the prices, I do want to take you to our members area. As we promised earlier, we will show you a sneak peek of how the members area looks like. Now, hopefully you can see this now on your screen, and you can see how our website looks like. So when you join and you log in, you scroll down and you see the 4 research products we have. So Australasian equities, UK equities, global equities, and the mining. And next to every report that you subscribe to, these are the few columns. So every week you get the latest weekly report, which is 5 to 6 stocks. You will see all the new recommendations when you click this, all the buy, hold, and sell recommendations. Very simple, easy. You can access our Fat Profits portfolio by clicking this, and you can see all the stocks we're currently holding. All our past sales, winners and losers, everything is in a table here, and you can see we got 7 out of 10 winners and 3 out of 10 losers. All of that is here. Any alerts that we will send out to you, if we see an announcement on a stock that we think you need to know today, right now, we will send you an alert to your email, and they are very informative. Last couple, we have that income portfolio that we talked about earlier, producing 18% returns. You can see that here. It's updated quarterly. And last but not least is all our weekly members webinars, which are held every Thursday at 12 p.m. in Sydney time. They are recorded, and you can listen to the recording here by clicking that. So all of this is available at your fingertips, easy to use, simple, and effective. Now, the question would be in your mind, we know we can read your minds, is what's the damage? What's the price? So let's give you some prices. So this is our public website. You can see this all on your own. You can type in our company name, all of this on our website. So there's the standard membership, premium, and platinum. You can see the 1-year prices. You can see the 2-year prices. Obviously, the 2 years is slightly cheaper than 1 year, right? So it'll give you a bit of better value. And you can just pay for it online. Just click the buy now button, subscribe, not a problem. We're happy with that. You're happy with that. All good. However, keep a note of these 2-year prices, especially on the premium and the platinum. We are going to do something special for you today. These 2-year prices, we are going to offer you something significant today. So let's get into what we can offer. So Chris, I'm going to pass it on to you now to explain our special offers.
Yeah, excellent. Nice description there, Roger. So as we can see, to all of the ones in our webinar, quite a few hundred in today, we're doing a special here, guys. Standard, we're taking a couple of $100 off, but I've been here for 11 years, and we know the benefits come from the premium and the platinum. Premium, well, Southern Hemisphere reports. So as you can see, and as Roger mentioned, the 2-year premium fee on that website was $27.95. Well, we're taking $1,000 off, so you can buy the 2 years at $17.95, which is only $900 a year. However, value for money is the 2-year price at $27.95 premium, but you're going to get it for 4 years. And we're value-based investors. 4 years comes and goes, so that brings your annual rate down to only $700. Now, if you're an investor to the global markets, or maybe you want to get into the global markets, you know, you're not investing in around the world at the moment, but you know there's value there. And I can tell you, working in the London office, there are certainly opportunities in the FTSE. Well, the platinum is definitely what you need to be looking at. So again, the 2 years is brought down from $46.95, and you can only pay $2,995 for the 2 years, only $1,500 a year for all of our recommendations. However, the 2-year website fee, which is $4,695, well, you're going to get it today for 4 years. Again, only brings down your annual rate to $1,179. So great value for money. So if you're looking at Australian markets, both the premium, as Roger mentioned, and the platinum do come with an account manager. I'm one of them. We have many others. You can call in, ask questions. and we're more than happy to give you the suggestions and direction. But obviously, at the moment, those are some really cheap annual prices to be taken advantage of, Roger.
Absolutely. Look, but wait, there's more. There's
Oh,
always more. So look, we have an announcement today as well. Look, the 4-year rate. Look, we've had people often ask because they're obviously managing some portfolios themselves, and often they haven't had a health check on their portfolio. So we're happy to announce today. Look, I've got approval from our management that if you decide to join us on the 4-year deal on premium or the 4-year deal on platinum, we are happy to offer a one-off portfolio review as part of that package. What that means is simply it's a health check on your portfolio. And how this works is you will email that portfolio to us. We will give it to our team of analysts. They will dissect it, look at the strengths and the weaknesses, and come up with some suggestions for you. And keeping in mind, they're not personal advice. We never cross the fine line. It's general advice, but we will tell you which ones to buy, which ones to sell, and which ones to avoid. And you will walk away with some quality information from that health check, which is probably overdue for some of you. So if you're keen to get that health check and you want to bring that annual rate down, look, the premium is only $6.99 a year, which is cheap as chips in the market. We'll give you a tax invoice. It is a bit of a no-brainer. Or the platinum, which is also fantastic value for an international investor, then we will encourage that. Now, to provide you the options so you can make your selection, there is a questionnaire now on your screen, and this will give you an opportunity to let us know which out of those options are you interested in. Now, while you do that, and I know there's about 500 people who are watching this today, and typically, look, I'll be straight up, there are a few people, no matter what we say, no matter what anyone says, we cannot change their mind. So that's fine. If you're after just free information, hopefully we've given you enough. We wish you all the best, not a problem. So look, if you're allergic to paying money, not a problem. We get it, that's fine. But for the others, we know there's always about 20% of people watching this webinar who always have an open mind. They are willing to do something different. They are keen to get that early bird advantage, and they are keen to do something different than what they have done before. And if your portfolio is in need of a desperate health check from a stock doctor, if you like, look, we are the stock doctors if you prefer. We can help you. And look, that $6.99 a year is absolutely nothing. If you only got one good idea from us, and that helps you get a few $1,000s back in return, you're the one who's going to be very happy. So we encourage you, and we are incentivizing you to give us a go. Now, Chris, while I'm seeing some people, just having a quick look on my screen, I can see there's about 15% of people so far have chosen premium. There's about 5% gone with platinum. There's a couple on standard as well.
Yep.
So while we're seeing that, I'll just take a quick question. There's an ex-member by the name of Jonathan. He's just asked a question saying, great presentation, Chris and Roger. I'd like to know that if I decide to rejoin the service, because I dropped out a few years ago when I got into property, and now I've sold and I'm cashed up. If I decide to rejoin the service, could I get an account manager to help me with redesigning my portfolio, because he wants to obviously restart a brand new portfolio? So how much can we help him?
Yeah, good question. What was his name? Sorry, Roger.
Jonathan.
Yeah, thanks, Jonathan. Yeah, good question, Jonathan, because a lot of times members will get out of the markets and they'll get back in. Absolutely. And if you remember that slide Roger showed earlier, sector rotation, we want to be making sure if you're going to be putting a new portfolio together, Jonathan, you're buying the right companies in the right sector. Again, we're not your IFA. We can certainly give you direction. So all you do is you click on the premium or the platinum, depends on what part of the world you want to be putting your money. And you could speak to someone like myself or another account manager here, and we could just tailor and give you some suggestions from our recommendations, what is best going to suit your portfolio, how much you've got in there, and obviously how long you want to hold these stocks for. So absolutely.
Excellent. All right. Thank you for that. We've received a comment actually from Julie saying, fantastic explanation of commodities in particular. She wasn't aware of what a super cycle means. She said, I'm quite keen to do something lithium and nickel, and I'd like to get into a couple of stocks early bird sort of advantage. So all I can say, Julie, look, if you are open to getting involved in some stocks which are moving but still yet to produce, and you're happy to hold them for a longer term, we've got at least a half a dozen stocks that we can help you with. And it sounds like you've got an open mind and some cash, which will help. So look, please talk to us and we'll be happy to do that for you. Now, I'll close the poll now. It looks like we've had plenty of people show interest. And look, we applaud you. We really do, for opening up your minds and trying something different, because it's not easy to change what you are doing, because we're all, creatures of habit, aren't we? Now, finally, we did promise at the beginning we will discuss a hidden gem, and this is a stock we're most excited about at the moment. This is a gold mining company, and while we're not shedding the light on the name of this company just yet, but for all those of you joining our service today, this will be the first stock we will recommend to you for growth. This company, as you can see in the infrastructure, this brand new site in Western Australia, and this is about to become a producer in June, which is only a couple of months away. So when they become a producer, we are going to see revenues come into the company. In fact, if you look at their setup, they're actually all ready to go. The project is fully funded. It's well within budget. They've got cash in the bank. They've actually raised capital last year. And in fact, if you look at where their share price was a year ago, in fact, it's coming up shortly. They've gone up. The production is ramping up, and as you can see here, in June quarter of 2022, they're ready. Now, the thing that we love about this company is they are one of the top 10 gold deposits in the country. They are forecast to produce gold for the next 16 years. The annual forecast revenues are $600 to $700 million, and with rising gold prices, we think that's going to probably ramp up higher than that. And here's a look at the share price just in a moment. Chris, over to you to tell us a bit more about why we like this company.
Yeah, Julie and Jonathan, and for the other listeners out there, guys, this is our highest conviction buy. What a stock. As you can see, only very recently we've been recommending them around 16 cents. $1 billion miner, so again, not a small company, Roger. $50 million in cash. And as Roger said, they're about to go into producing their own gold. That's when the general public and fund managers are going to realize, well, these guys are no joke. So a lot of our members are getting in early. As we can see, around 43 cents. It's jumped up quite a lot. Why we like this stock, everyone? Cheap gold excavator. Okay, they're going to be pulling out gold around $1,300 an ounce. Again, going back what we were saying with evolution, their profit margins, if gold is going up, their profit margins only continue. And look, hedge against inflation in America. Interest rates. America has started rising their interest rates. They've already done it once. They've got 5 more to go this year. And as we said, $27 trillion in debt. So the gold price is going to go up. These guys are going into production. A very cheap price at the moment. And to all of our listeners, if you didn't click on one of those memberships, not a problem. Call in and just ask us about the stock, purchase the membership, and we can tell you exactly why we like this stock.
Absolutely. Well said, Chris. In fact, this stock already has made a lot of money for some early bird members. And they've gone in at 16, 20, 25, 30 cents, and they're already very happy. One guy's put in $1 million, and I know I've spoken to him. He's put $1 million at 15 cents last year. He's done a lot of research in this company, and a lot of these people are expecting this to be $1.50 to $2. Well, time will tell in the coming months and years, but look, this one stock alone could well and truly set you on your way. So please talk to us. In fact, if you want to call us, the phone numbers are on your screen. So we've got a 1300 number. You can call us. You can also email if you've got any questions at info@fatprofits.com.au. And look, that brings us to the end of today's webinar. My name is Roger, and it was a pleasure hosting you. Hopefully you got some good information from us. And if you decide to open your mind and join our service, we look forward to working with you and helping you make some money in the stock market. And on that note, I'll pass it on to you, Chris, to say your final words.
Yeah, thanks, Roger. And listeners, we do hope you did take away some nice, good points, whether it's a stock, sector rotation. We do appreciate you logging in, and we really do look forward to hearing from you. So yeah, happy investing, and thanks, Roger.
Okay, bye for now.